Hi, everybody. So, welcome to another ITPM Flash episode. And for those of you who celebrate, happy July 4th. So, what am I going to talk about today? A stock that I've been buying recently called Cameco. Ticker is CCJ. And I've traded this stock multiple times from the long side in the last 2 to 3 years. And as mentioned, I've recently started getting back into the stock. So what's the story here? So Cameco has a market cap of $13 billion. Share price is just below 31 bucks, and the ticker is CCJ. So the long-term reasons for me liking the nuclear uranium space is, number one, nuclear clearly has a role in reducing global carbon emissions. And number two, in particular with respect to the uranium pricing cycle, since 2020, we've seen the supply-demand situation in uranium starting to balance out after a decade where uranium inventories were building up. And in the short term, we had last year, for the obvious reasons, and that's continued into this year, uranium prices becoming much stronger. For CCJ themselves, they've actually this year earlier announced that they have a contract to supply uranium to the Ukraine, which is their biggest ever contract of $4 billion. And lastly, but definitely by no means least, in the Q1 report at the end of April, the remarks from the CEO included the following: demand for nuclear power is driving the best fundamentals we have ever seen for the nuclear fuel market. So let's get into this idea. What do these guys do? So they've got two major business segments: uranium production and fuel services. They are a well-established miner and refiner of uranium, and importantly, they operate in a very stable part of the world. They are the top North American uranium miner and the world's number two. And also they have a significant conversion services business. They are one of only two official uranium fuel manufacturers in Canada under the CANDO program. And their uranium products are used globally to generate clean electricity in nuclear power plants across the world. Their competitive position revolves around the fact that they own the world's largest high-grade reserves mine for uranium, and also they have the lowest cost operations, which is a pretty good combination. They are one of only 6 operators globally that possess the infrastructure and the know-how with which to meet uranium demand. And for this reason, utilities have always contracted with their supply intermediaries and the miners, so people like Cameco, in the long term, because essentially you cannot afford to risk shutting down a nuclear reactor because of a lack of fuel. So in terms of the quants on this company, we're seeing very strong earnings growth for this year of over 200%. Now, admittedly, that's coming from a low base, but we're going to see proper earnings this year for the company of $1.03. And next year, that's increasing strongly again to $1.70. So obviously, that's a growth rate of 65% for next year. For this year, the stock's trading on a PE rating of 30 times, and next year, 18 times. There's basically no short interest in the stock, so I wouldn't expect to see a support from any kind of short squeeze on this. So what's the story here? Well, we got the long-term story that I touched on at the beginning. So we have this steady expansion of nuclear energy around the world, which I think is going to be, a kind of decade long experience. And, the reason for that, the main reason, is that people are now belatedly realizing that nuclear needs to have a far larger role in the global energy ecosystem in order for them to meet, quite frankly, unrealistic carbon emission goals. So nuclear has a big part to play in this. The US government's recognized that. They're actually currently attempting to support the nuclear industry in North America via various aspects of the Inflation Reduction Act. So we go back to the end of 2019, beginning of 2020, for the first time since March 2011, which is when the nuclear accident occurred at the Japanese Fukushima plant. you start to see supply really tightening, and we now start to see a situation where supply and demand are basically balancing out. And then that's really kind of improved in the last couple of years, but it really took off last year for the obvious reasons around the Russian-Ukrainian conflict, which of course has led to an extra dimension to the CCJ trade. So the uranium cycle is very long term. It's very slow to pick up on changes in demand, but also demand is very slow to respond to changes in supply. So you get these very kind of exaggerated moves across the uranium cycle. It can take up to 10 years to develop a mine. So obviously this is not a short-term thing, or indeed to build a nuclear reactor. And this, coincidentally, of course, is the approximate length of a complete uranium cycle from low to high or high to low. Now, Fukushima was in 2011. So we're now, you know, a decade down the line, and it's kind of the sweet spot now for this cycle to start to reverse. So we've seen uranium demand growing. According to the World Nuclear Association, a couple of summers ago, we had approximately 50 reactors under construction. Now, that's compared to about 440 that were in operation at that point. That number is only set to increase as places like China and India and other places need to increase their allocation to nuclear power. Since 2021, we've also seen producers becoming consumers as they've decided that the cycle is turning, and they've actually started to buy in the market themselves, which of course has then had a beneficial effect on uranium prices. And on the other side of it, on the supply side, because of the natural kind of degradation and utilization of mines over time, it means that we don't have enough supply. There are some estimates out there that miners would need to see $60 a pound for uranium to start introducing further capacity to meet the increased demand. We currently sit just around 50. So Cameco essentially is a call option on high uranium prices. Now, to give you an idea of how much they could still run, admittedly, they have already had a good couple of years, but in terms of how far they could run, back in 2007, which was the previous peak of the last uranium bull market, the market valued Cameco at about $20 billion. The current enterprise value is just over 12 billion. So that would give it an extra kind of 60% of upside, just to put it into context. So, you know, what do we see here? We see very good supply demand dynamics if you're a supplier or an owner of uranium. And we see a sector that's basically been in a 10-year bear market. And we have probably already passed the major inflection point of that. In terms of the recent developments with the company, last October, they announced that they were going to acquire Westinghouse Electric, along with Brookfield Renewable. Westinghouse is one of the world's largest nuclear services businesses. And also last year, Cameco restarted the world's largest high-grade uranium mine after they were seeing this more than a decade long of a bear market in uranium prices reversing, partly because of the Ukrainian war, but also because of the long-term effects of countries around the world needing to reduce their carbon emissions. They're also ramping up production because they have secured a contract with the Ukraine to replace Russia as the Ukraine's principal supplier of uranium. This is Cameco's biggest ever contract. It's worth about $4 billion. And it's for them to supply uranium to the Ukraine from next year up until 2035, meaning that the Ukraine can end its reliance on Russian fuel. The company is also betting that there are going to be other East European countries that want to reduce their dependence on Russian energy. So there's potential upside from that. At the moment, they're going to be supplying the 9 reactors that the Ukrainians currently control. And if they manage to recapture the other nuclear plants that are currently under Russian control, that would give them an extra 6 reactors. So as I said earlier, the CEO of the company was very bullish in his Q1 earnings remarks, saying that demand for nuclear power is driving the best fundamentals we have ever seen for the nuclear fuel market. I am not sure there's ever been a better time to be a pure play investment in the growing demand for nuclear energy. That's from the CEO. At the beginning of last month, in June, the US Senate Environment and Public Works Committee advanced a bill that is going to fast track deployment of advanced nuclear reactors. This got the whole sector moving, so not just CCJ, but there's also a global uranium ETF with the ticker URA, which is another way to play this. As I mentioned, last earnings report, which was Q1 at the end of April, EPS beat by 8%, but bearing in mind that analyst estimates had already risen by 70% in the weeks leading up to report, that was a great report from an earnings perspective. Next earnings we're looking for end of July. I could see this stock easily trading up into the mid-30s. It's currently just below 31. As I say, I've started accumulating stock. Thanks for listening, and see you next time.